All right, let's get to it. I am not a financial advisor, and this podcast is for informational and educational purposes only. The content discussed here is not intended as financial, investment, tax, or legal advice. Always consult with a qualified professional before making any financial decisions. Past performance is not indicative of future results. All opinions expressed are mine only. Aloha and welcome back to the week that was, your weekly market recap. I am your host, Colin Edsman, and wow, what a week we just had. Oh my goodness. We got news on Monday that changed how the markets were thinking about everything. Literally flipped the script on geopolitics. Then the Fed came in Wednesday. Kevin Walsh's first meeting as chair doesn't disappoint. And by the end of the week, we got deal announcement that reshaped streaming restaurants and chip manufacturing. This is the kind of week where you had to be paying attention or you miss the story completely. So let's break it down. The three things that actually mattered, what moved the market, and the lurking underneath it all. Also, side note, we're going to talk about some agentic trading as well as your boy is now a published author. As you saw in the welcome waiting room thing in the very beginning, there are two books there, and both those books were published by me. Now, they're completely different subjects. One's made for young adults, and the other one is made for anybody just trying to direct themselves towards a long-lasting legacy of wealth. As the title suggested, not financial advice. But let's get back into the show. But after that, though, before we get into anything else, I want to say thank you to the few people who actually bought the book so far. Honestly, I'm just really excited to talk about it. It was sitting on the shelf a very long time. Now, Oceans of Time, The Storm is out and available for you to buy on Amazon. So please check it out. If you got a young Harry Potter-esque lover who likes a little bit of magic and fantasy, that's the type of book for him. I created it around the culture that I'm from, so it's a kind of a little bit of an eye into that as well. Not financial advice. It's just a book of legacy tips and how the market functions for long term and the ways you can get in and keep your wealth safe, as well as some history behind the Hawaiian culture and the difference in having wealth and not having wealth over a time span. You can get into the book if you get a chance. It's available on Kindle right now, as well on hardcover and on paperback. Thank you very much. That is the end of this advertisement segment. But are you bullish or bearish going into next week? Because honestly, the mood shift on Monday might have changed a lot of minds. Let's see where you're at. Just leave it out in the chat if you're down with us. Let's check something real fast, make sure everything's going. Quantum Queso Dip in the chat. What is up, fam? Thank you for joining me. I'm just checking everything is good to go. What is this over here? All right. Yeah, it's perfectly fine. All right, just making sure. This thing's giving me heat for no apparent reason. So, story one, the peace dividend. The US and Iran announced historic peace deal and markets roared. Monday's morning, about June 15th, before the opening bell announcement, United States have agreed to framework a de-escalation and direct diplomatic talks, not just a ceasefire, a genuine diplomatic framework. And if you were with me last week, we were kind of on the fence on whether that was going to happen because honestly, it's been going back and forth for months. Like, will they, won't they? Will they, won't they? Just shit or get off the pot, right? But the market's reaction was immediately jumped. 1.4% on the S&P 500, as well as the Nasdaq popped about 2.02%. Technology stocks led the move. Discretionary stocks like travel and retail got a bit of a boost. Energy actually pulled back slightly because of cheaper oil. We got Quantum Queso Dip here in the chat, bullish on AI, bearish on Bitcoin and gold. Yeah, I feel that a little bit, bro. Yeah, I feel that. But let's see why that matters. Listen, for 2 years, maybe longer, there's been a Middle East risk premium baked into every market. It's like walking around with a weight vest on. Everyone's stronger once you take it off. Where there's uncertainty about geopolitics, whether it's shipping routes getting hit, oil price shocks, or just the sheer unknown, portfolios get defensive after it all. Honestly, it just happens. Growth gets punished, banks get nervous about capital deployment, companies defer big investments because honestly, they don't know what's going to happen, right? You just wait it out for a second, sit on cash if you like that term a little bit better. A peace framework doesn't mean the Middle East is solved, it means the immediate tail risk is smaller and the changes uh, that changes behavior like instantly. This is a reminder that sometimes a big catalyst for the market rally isn't earnings, it's permission to move forward when uncertainty lifts. Even just a little money that was sitting on the sideline starts hunting for areas to return again. Like we're looking for that R, receivers. Like who's going to get this capex, right? For the next week or so, we're going to watch the leadership in the rally. If it expands beyond tech, mid cap and small cap start sort of participating. If international markets start catching up, that tells you the peace deal is being genuinely priced in. If it's just the Magnificent Seven again, the relief might be just a bit on the temporary side. Thank you for the hat compliment. To the chat, did you feel that the shift on Monday? Did you feel that shift on Monday? Did it change your positioning at all? Or were you already kind of positioned in for this? I know for me personally, I was just kind of positioned in. I was just ignoring it completely, honestly, because I was so into the Robinhood agentic portfolio I've been kind of build. Now, it's not easy to build it, but once you get it going, it will definitely lose you money at first. But it's probably going to gain me money back. I mean, it takes a little while to get the agentic algorithm or the story you're trying to have it trade against. It takes a little bit of tweaking and some time. So it's got a 4 week sort of benchmark, right? Since we're talking about tech a little bit. All right. So next big thing that happened this week, the Fed's new era, Walsh's first move, right? So Wednesday, June 17th, Fed opened market committee meets for the first time under new chair Kevin Warsh. Warsh? Is it Warsh? Okay, hold up. Hold the hell up. I thought it was Walsh. Okay. It's Warsh? Nah. Okay, that doesn't matter. We're gonna have to say Warsh for the next umpteen years? Oy, okay, so back to it. He's a different kind of Fed chair. Obviously, I've been pronouncing his name real wrong. Not a career academic, not a central banker. He's a former Goldman banker, former presidential advisor, and he's signaled he's more hawkish on inflation. That's the little bit of the news. Our new daddy Warsh. It's Warsh, bro. Oh, Whatever. I'm gonna have to get used to saying that. Warsh just sounds weird. Like I'm getting like it's me Warsh, right? What are we gonna name him? He's gonna have to have some sort of nickname, right? I mean, we had DJ Pow Pow. What are we gonna call him? It's me Warsh. I don't know. I don't know. We're gonna figure that out. Let's shoot. But the decision itself was 12-0, unanimous. Rates stay at 3.5 to 3.7%. But, and this is a huge but, the dot plot kind of flipped hawkish. Here's the numbers. March projection for the end of 2026 rates 3.4%. June projection for the end of 2026 rate at 3.8%. That hike is probably coming, and multiple hikes at this point. 17 out of 18 officials now see risks to inflation as tilted to the upside. Markets are pricing in a possible hike as early as October. Who's your dad? Is that what we're gonna go with, bro? Like Quantum, are we gonna go with who's your daddy Warsh? Daddy Warsh? Warsh is weird. Warsh is a hard name. We might have to just go with Daddy Kevin, right? I don't know. I don't know. But here's what Daddy Warsh said. He emphasized that economic activity is solid, productivity is strong, capital investment is strong, and job gains are keeping pace. Here's a translation though, if you're not watching how this goes. There's no emergency. The Fed can afford to take its time, but don't confuse patience with dovishness. Warsh's tone measured but firm, not panicked, not rushing, but clear eyed about inflation risks. But here's why that matters. This is a regime change. Under Powell, we got signals that cuts might be coming. Under Warsh, we're back to the Fed will hike if inflation doesn't crack further. That's a different world for a few different things, like bond investors. Long bonds sold off hard because higher rates ahead means capital loss for existing bondholders. Growth stocks, especially unprofitable ones, higher rates make future earnings less valuable in the present terms. Banks are, well, this is actually good for banks, for the profitability, and value stocks starting to look reasonable again relative to growth. But the deeper angle is here's what I think people are missing. Warsh is not dovish, but he also wasn't the kind of hawkish that spooks the market into a crash. He said, and I quote, "We're watching inflation. We're not worried about the employment side. We have time, but don't expect cuts. Expect hikes." Like he literally said hikes. That stabilizing message, actually, no, yeah, it is. Okay, so that is a bit of a stabilizing message. No surprises, no panic, just some clarity. The Fed is confident enough in the economy that it can normalize policy slowly. That's actually pretty healthy. If the Fed was terrified about recession, they'd be pretty dovish. If they were panicked about inflation, they'd hike immediately. Instead, methodical, forward looking, prepared to hike in the fall if needed. Cacaw. Yeah, inflation is always, yeah, Quantum Queso Dip is said that inflation is an issue. If you have any question about finance ever, the answer is always going to be inflation. For the friends out there who don't understand how this functions, it's boring, but this is honestly the biggest mover of the entire global economy and ours as a whole. But here's the takeaway. The Fed just told you rates are probably 25 to 50 base points higher by the end of the year. Plan accordingly. If you're sitting in cash at 4.5% yields, you're in good shape. If you've been in all-in mega cap betting on rate cuts, that thesis just shifted. like out the door. It's gone. Like wave goodbye to it, send it a letter to, I don't know. It's going to Malaysia probably because it's gone. But are you surprised by it all? Honestly, chat, were you expecting Warsh to be tougher on inflation? Eh, this is his first meeting, right? So we got to get used to, as Quantum Queso puts it, Daddy Warsh. Yeah, Warsh is going to be weird to say for a bit. But for our next story, deal season is here. So there are three major acquisitions with three major acquisitions. There is some signal confidence in the markets. So here's the first deal on the radar. So we got Fox and Roku. So the buyer, of course, is Fox, and the target they're looking at is Roku. The price, $22 billion, announced earlier this week. So it's a streaming wars, right? Fox owns a ton of content, but no direct to consumer foothold in streaming distribution. Roku is the number two platform, well, after Amazon Fire TV, with 75 million active accounts and proven ad tech business. Fox stock reaction, though, it took an 11% dip. Roku stock was pretty mixed. But why now? Media companies are desperate. Netflix proved you can win with streaming. Like Disney Plus is growing a little bit, Peacock is growing. Fox doesn't have a direct pay. Roku is a natural fit. They get the platform and the ad network and the install base. Here's deal number two, Amex and The Fork. American Express is the buyer and the target is The Fork, which is a restaurant booking firm. The price, $700 million. The date was announced earlier this week. Amex wants to own the experience, aside of the business, not just payment processing. If they own the restaurant booking platform and the payment rails, they own the customer relationship from beginning to end. Like TripAdvisor, for instance, took a 12% pump, speculation that Amex or others might bid on them too. So that's something to look at moving forward for Amex holders. Now, here's the next deal. And this is one of my favorite stocks to talk about, Intel and Apple partnership. And this is massive. Now, obviously, I love Intel. Intel will be in my family for the next umpteen thousand years. But what happened was Trump announced that Intel will design and manufacture chips in the US with Apple. This is a massive bet on onshoring chip manufacturing. Intel stock leading chip stocks way higher. Like Intel stock hit another all-time high this week of $138 a share, up over 500% in less than a year. We've been taking We've been talking about reshoring manufacturing for years. Intel has been losing market share to Taiwan Supermicro and Samsung overseas for who knows how long at this point. This partnership signals huge stuff for Intel. They might have better than expected new architecture coming. Apple is serious about bringing supply chain back to the US. Government incentives like the CHIPS Act are working, and geopolitical risk is driving real capital allocation in that decision making department. And yeah, quantum queso dip back on rate hikes real fast. Yeah, for sure. They're definitely priced in at this point, and we might get multiple rate hikes by the end of the year. So for you as an investor and even just an observer of the stock market, please put yourself in the winning position, right? It's all about trying to see what's coming and not trying to be a contrarian about it, but allocating and being defensive towards it and keeping your eyes open. But back to the deals. There's a deeper pattern here happening. All three of those deals say the same thing. Companies with capital are confident enough to deploy it. Confidence isn't just about the market going up. Confidence is about I'm willing to write a $22 billion check I'm willing to buy this massive platform. I'm willing to bet on US manufacturing, right? Like, so all of these companies are just bullish and allocating it correctly. It's not a contrarian signal, like I said. It's not a buy the dip either, right? So you have to kind of consider that. It's more of a I believe in the future. I believe the future is solid enough to lock capital in it for years to come. The deal is often a leading indicator of corporate confidence. With when CEOs start buying, when private equity starts deploying, when strategic acquirers like Fox and Amex start signing checks, that usually means they believe growth is coming. It doesn't guarantee returns, but it's a healthier backdrop than companies are hoarding cash and waiting, right? So, which deal surprised you the most? Roku or Intel and Apple? Like, I'm pretty surprised about Roku. I mean, maybe I'm not surprised, but I am like, it was kind of a little bit of a shock to me. I mean, it makes sense, but who knows, right? Now, before we move on, let's take a look at the scoreboard for the week. Here's some of the big winners. Wolfspeed up 15.2%. It's a semiconductor supply. TripAdvisor up 12% because they think that maybe Amex or others, somebody else might buy them and integrate them with their credit card. Who knows? Invista Holdings, which was up 9%, and tech overall, the Nasdaq was up 2% overall. Geopolitical relief and strong earnings backdrop. The big losers, though, unfortunately, Fox took a bit of a downturn on the Roku acquisition, as well as debt concerns and integrating a little bit of risk. Long bonds took a bit of a sell off on Warsh's hawkish tone, and defensive sectors started to underperform as risk on came back. So, this kind of tells us the market is saying less geopolitical risk, more growth is okay, but rates are coming. That's a growth positive, safety negative setup. Exactly what you'd expect after a peace deal and a hawkish Fed pivot. Here's a little bit of a deeper angle on it, though, real fast. Oh, let's check on the chat real fast. Receiver broke out. Oh, yep. And an AI chemical company. Okay. All right. So Quantum Queso Dip is talking about a ticker ENTG. I'm gonna take a note of that. We'll remember that for later on and check it out. It's a AI chemical company for water wafer production. Oh, okay, interesting. All right, but let's get back to the deeper angle. What's the real story though behind all this? If we strip away the headlines, what's actually happening? The narrative is we're in the early innings of a re-rating of the economy. For 2 years, we've been operating under uncertainty. Will the Fed cut or hike? Will geopolitics destabilize? Will AI materialize or fizzle out? Now we have the clarity on some of these. Fed will hike, not cut. Peace framework reduces tail risk. And tech spending is real and profitable. Clarity isn't always good news, but it's actionable news, and that changes everything. What's really shifting from it's going from all in on mega cap tech to will tech do well? But so will value, so will cyclicals. It went from buy the dip to earnings, earning real returns. And it went from capital is scarce towards capital is finding a home of some sort. This is a healthier, more sustainable, less bubbled kind of market. But this is what we got to watch for. This is the real test. Does the peace dividends stick? Or do we get fresh geopolitical headlines that walk this all back? We never know anymore, right? So keep your head on a swivel, but there are a lot of money moving in the right direction, so stay confident in your conviction. If you're feeling good, go in that direction. I'm personally feeling good about where the markets are going, and I'm pretty bullish, but pragmatic. Does the Fed hold firm on hikes, or do we get any signals that might slow the pace? Does act does deal activity accelerate, or was the was this just a 1 week flush out of announcements? Now, this was a short week. I'm sitting here on a holiday, right? I was surprised, as some of you probably were too, to wake up this morning and the markets were closed. Uh, I don't pay attention to all the holidays. I'm home all the time. But this is a pretty bullish. This is a pretty bullish outlook, like I said. Next week's got some opportunities coming. So this is some of the things to put on the watch list. Banks and value stocks are going to move a little bit higher because higher rates are good for bank profitability. Watch JP Morgan, Goldman Sachs, Wells Fargo. If they stay strong, the shift to value is actually real. Cyclicals and discretionary as well. Consumer spending is solid. Watch home builders, auto stocks, retail. The peace dividend benefit should flow in that direction. Also, small caps versus mega caps. The Russell 2000 underperformed this week. Let's watch if next week brings broadening of the rally. If the small caps start catching up, that's a sign health is spreading beyond mega cap tech names. And of course, Bond. Uh, James Bond. No, I'm kidding. We got to watch the bond market. Keep an eye on the 10-year yield. If it stabilizes around 4.3 to 4.4%, that's a healthy equilibrium. If it rips past 4.5, that could slow equity gains. But here's the scenario. Most bullish outcome for next week. Peace deal continues to be digested, more re-rating from defensive to cyclical. Earnings season confirms that AI spending is real. Corporate deals keep flowing. More confidence in that area, and bonds settle down after the post-Fed spike. If all that happens, you're looking at a market with real earnings growth, lower tail risk, real capital deployment, and broadening breadth overall. And small caps are going to start catching up. That's a real bull market setup, not a meme rally, not some Fed carry trade, real effing growth. But we got some risk here too. If geopolitical tensions re escalate or if the Fed signals faster rate hikes, this peace dividend evaporates. So stay nimble. Hood broke out this week. Thank you for reminding me. There's so much going on. Um, it blew past 100 and it hasn't seen over $100 a share since January 26th. Now that's like months and months from now, almost 6 months ago, right? So this is definitely bullish momentum. And with all of the positive action happening from the markets, I think Robinhood's set to pump even more. Now, on that topic, July 4th is coming around the corner and Trump accounts go live. Now, this means that Trump account money will start flowing towards Robinhood brokerage. I'm not 100% sure, but I'm 95% sure that Robinhood will be covering the Trump accounts and managing them, but they'll be managing them through the Robinhood Strategies department, led by Steph Guild and team that lead your managed portfolio. So mine has been doing very well since its inception, and I'm sure that these children are going to get a great future out of these Trump accounts. And Hoodstock is just going to keep flying because now we've rotated from just crypto trading to long-term investments, not only Trump accounts, but we got custodial accounts, we have agentic trading, we have retirement, And of course, of all the beautiful other things like no commissions trading, futures, all that other stuff, options trading, now like they're going to be here long term, ready for that wealth transfer, for lack of a better description. You never know when that generational wealth transfer is going to pop up, but Robinhood is prepared to take it and run. And these children are just going to have a great future ahead of them because Trump Accounts is managed by some of the best investors on the planet. Now, before we get into the ending area of this, I'm going to just run my book ad here for a second. Now I can say book ad, which is wild, but I'm going to give you a little bit to kind of digest what just happened. If you have any questions, please leave them in the chat, and I'll move towards the uh, slow, methodical end to this podcast because oh my, this trading week was all over the place. Uh, Thank you so much for sticking with me so far. I'll see you in just a little bit. Yeah, sure we can. Yeah, 100%. Aloha and welcome back. Yeah, so there's a question here in the chat. Can we see an example of agentic trade on my end? Yeah, sure. Let me figure out a way to pull it up for you, and I'd be happy to show you what that looks like. Give me 1 second, all right? All right, so let me pull it up real fast. Let me see if this works this way. Yeah, all right, cool. So Quantum had a little bit of questions about my my agency, basically is what I'm calling it. It's basically an agency. Oh my gosh, my face is in the way here. I'm gonna come to the side here. There we go. So this is sort of how this is my dashboard. So setting up this AI agent wasn't necessarily the easiest thing in the world, but once I got it done, it was pretty straightforward. Now, the connectors itself is pretty easy. So if it's not obvious, I'm using Claude. But using Claude and connecting it to Claude was actually very, very easy, right? So what you do is now we'll get out of this. You go into your chat and you put into your chat what you would like it to trade, right? How you would like it to trade. Um, for me, I was trying to visualize momentum, something that I can't do. And also, I wanted it to trade the hours that are just really difficult for someone in Hawaii, right? So I have it scheduled or automated to trade those early market hours, right? So that was the overall thesis that I started out with is I didn't want something too hard. I wanted it to be I didn't want to use too many tokens, right? Because if it uses too much processing, for lack of a better term, it starts to use up a lot of tokens, and then if your story is too complicated, it won't have enough tokens to trade those stories all week unless you have the expensive account, I guess, but I didn't want to do that, right? I got the cheap account and I wanted to see what I can do. So basically, I scheduled it a few times a day, right? So we'll go to the scheduler here. So it's in cowork, right? And scheduled. So when you start to after you've created your theory here, then I would suggest taking it out of chat or asking the chat side to turn it into a prompt for co-work. Now you can use another platform probably. I don't know. I tried to locally host it too, and that was just getting very difficult because I'm not super computer literate, right? I'm not. I'm gonna be completely honest. All this stuff, as you can tell, over the last 6 months, I've had to learn it. So I've gotten better and better over time. And it's the same thing with this. So I had to kind of go through the natural processes of not knowing what the heck I was doing. So it started with I needed to figure out if it could trade. So I had it basically buy something through once it was connected to the Robinhood agentic account. After that is where the problem showed up because putting it in the chat and telling it to trade very easy, but the chat side of Claude will not trade. It's there's no scheduling there, right? It only does stuff when you ask it to. So that's what frustrated me because it kept telling me it couldn't do it automatically. But I figured out you can do it automatically or have automated trading without having a different app. So if you use Cowork and you kind of schedule the people, right? So back to my dashboard, I have it set up as basically employees, right? So at the very top here, we've got our leadership, right? So we got a CIO. I modeled it after Steph Guild because she has the most amount of public information about her job out there, right? So I had it learn about Steph. I learned from her. You guys learned from her. So I modeled an agent after her. So that goes through a bi-weekly macro and strategy review, which then it goes in and teaches all the other agents. This calibrates risk parameters, evaluates cross agentic performance, and sets the investment thesis for the upcoming cycle. Now, my next head here is Michael Obasina. Of course, we need education. So, as you can see here, I didn't create robots, I created people because that's what I understand. I understand how a company works and I understand how trading functions. So, I created agents, right? And I gave them human personas. So we have head of education, and he goes through monthly curriculum update because you don't want this running all the time. If it's a big, long, complicated, basically redesign of your dashboard and your trading process on your agents, it's going to take a lot of coins. So you don't want to do that every day. So it has research, his newest trading methodologies, synthesizes best practices, and publishes a playbook that the agents follow. Now, let's get down to the actual employees I use here. So we have at the very beginning of the week, starting at 4 a.m. my time, we have Marcus Webb, and he's the risk posture and sector focus, right? He basically has a council of sub agents who talk to each other and go back and forth on what the overall weekly posture should be. And then after that, at 4:30, or right about an hour or so after markets open, the trading agent goes live, and Alex Chen looks for entries, position review, and looks for and of course puts in stops because it's not always looking for when is the best time to sell because it would be on all the time, right? So it has to kind of put in a stop that is already programmed in because that's better because if it hits that stop, then you take a loss. And then if at the end of the day, we have a someone who checks if those trades made movement, right? Hopefully it's green, and then it moves the stops up behind it, right, to catch those profits. We also have an end of day risk officer. Oh, that's the risk officer. Excuse me. And then we have an analyst who goes on about a couple hours after the market closes and kind of picks up the things that happen after market, like earnings, that sort of thing. Checks the overall health of the market, and then checks the market context for the day. And then at the end of the week, there's a back test, right? We don't have any back tests to do because it's only been going about a week now. So there's no back testing happening. Now, this is my second sleeve here, right? So now I have a second trader who does the same thing, but on different things, on a different area, right? So I'm having it trade VanEck ETFs because those ETFs are based off of sectors, right? So it's basically following sector momentum to keep it simple. And then non-implemented yet is my sleeve 3, which is basically DCA into SpaceX. And then we have this is kind of a daily sync. Basically, just making sure this dashboard here, which I had to create as well, is synced up every day by the time I check it. Because if not, it would just have to keep running, right? So I'm pretty cheap. So I want to use the least amount of money, or in this instance, tokens or processing power as possible. So this is the best way that I've found so far. So hopefully, Quantum Queso Dip, you're still here and I've answered some of your questions. But yeah, really, it just comes down to scheduling these tasks. Now, this can be scheduled right here in Cowork as well, right? So you just go into Cowork, right? You set up a new task and you can create it with Claude, right? So all you have to do from here is stop it because I don't need you, is basically tell it what you want it to do. It's like, can you schedule me 3 different agents who trade first thing in the morning, middle of the trading day, and end of the trading day by these parameters? I'm not going to give you any because you know how to trade if you're sitting here with me already. But now imagine you could take your overall thought process, if it's successful, and just give it to these agents. And then they're just going to follow your trading process and probably do better at it than you. Maybe, maybe not. I don't know. I haven't seen it do anything yet. Currently it's down like a 0.5%, right? So I hopefully soon we can have agentic or the agents on Robinhood Legend at least to see, so I can kind of whoops, so you can kind of see where its progress is, and you can kind of check back test it maybe, or even if I could have it on Robinhood Legend just so I could show you, but I can't necessarily do that. So far I have it's down about a 0.5%. So the 3 trades that it took, 2 of it hit its stop loss, which was like 4% below. It's only trading maybe 20% per position, so I'm not overly concerned. And it's only taking, and it can only buy full shares of stocks. Now, that's something to note too. So if you're going to have your agent trade, it can't necessarily put stop sells on partial shares. So if you wanted to trade full partial shares, it can't put stop losses on automatically. So I had to trade full shares because what it can do is it can automatically put stop losses and then do trailing stops as the stock hopefully moves higher. Its picks have been pretty good so far, right? It's got SMH in there um, for the uh, VanEck sleeve. Also, you can see here it picked up, it closed a few things. Oxy closed low. But this was kind of a dodgy week for everybody anyway. So having its first week be down 0.5%, I'm not too concerned about it because I had to kind of check it, right? Because it's got checkpoints here, right? Oh, here. So because I gave it I gave it I gave it a payroll, right? So this is how much money I want the agents to pay or get paid, because then I use that to basically pay for Claude, right? So if I can do that, then I can actually pay for Claude. So it's obviously doesn't have its payroll paid for yet, but eventually, yeah, it'll make the minimum that I want it to, which is $38 right now. Now every agent I put in, I just add another dollar. Now this is no money, right? This is all profit to me, right? But I'm choosing to try to bake in a payroll just so I can have it start off paying for Claude, right? Because it's sort of paying, that's paying for itself, right? That seems logical. If I can get it to at the very least pay for my agent subscription, that's a win. Like that's a win. It's automatically winning for me. I'll take it. Now, if it makes more than that, I'm happy with that too. But yeah, hopefully that answers your questions, Quantum. But we'll bring this pod to a close before I end up rattling on for eons about. Well, honestly, I could go on forever about my agents because this is what I was doing a lot of the week. So thank you for that question. That was a good question because I imagine a lot of people are going to have that same question coming on. As you can see, I'm still getting sort of used to the setup, so forgive me if I keep looking over here thinking the camera's here when you over here, right? Hi, you're over there. My goodness. All right, so I hope you guys are having a good evening or early morning or midday, whenever you are, wherever you are, of course. I'm having a great week. The summer has been just nothing but a blessing. My son's birthday's coming up in a few weeks, so we're going to be celebrating that on July 4th. So it's going to be a big month coming up early in July. So I want to get this month done strong, get these agents trading for me so I can just look away for a little while, right? Because that's what we want it to do. Like truly, at the end of the day, we want this thing to just do it for us. Like my theory is that if these agents do well and I can have it trade for me, then that's it. It just basically prints money over a long period of time, depending on your risk appetite, especially if you can give it a good story, right? If you're a good storyteller, uh, vibe coding is not hard. Now, I have my problems. I've definitely maxed out my tokens for that 5 hour period trying to ask it stupid questions because honestly, some of it I didn't know. Like when I was having to run a local run this local host locally host it, I haven't seen the command area of a computer in decades. At least a decade. Back when I was learning Python, just because I figured I should at least look at it. Now, I'm grateful I didn't deep dive into that cuz that's almost a pointless job now, isn't it? My goodness, what a crazy year, right? Like even the last few years how evolved AI has gotten. But let's close our pod for today. Here's what sticks with me from the week. The market was scared. Geopolitical risk is real. The Fed chair was changing. Nobody knew what the new regime was going to look like. Then we got answers, not all of them perfect, but clear. And clear beats scared every single time. It's not the market psychology that everybody was looking for. It's how humans functions, right? We can work with certainty, even tough certainty. We freeze with uncertainty. It's like being in the middle of a highway, not knowing what side of the street to go on while the highway's busy. But this week was uncertainty getting resolved. That's why the markets did way better than we thought. It's not that everything is perfect. Rates are going higher. The peace deal is fragile. Fox just took a $22 billion bet on streaming. That might not work out. But Roku's awesome, so I'm pretty bullish on that deal. We know where we stand at the very least, market wise. And from where we stand, growth looks reasonable. But that's the week. We catch our breath over the weekend. Today was Juneteenth. I get reminded every year, so the markers were closed, but the world didn't stop. So we come back Monday with fresh eyes. My agents turn back on early morning Sunday night and start doing their job. And their job better be to make me some money. But what I want to hear from you guys, are you more bullish than you were on Monday? Does the Fed's hawkish tone concern you at all? Or does it feel sort of manageable? That's the one thing you're kind of watching most, or what's the one thing you're watching most closely for the next week? drop those in the chat or in the comments, either here or on my X. I read them pretty closely. That's how I get to know everybody out there in the internet. It's a shitty world a lot of time, but sometimes you make good friends out there. So I want to say mahalo for being here. I want to say mahalo for the people who purchased my books. That's incredible. It's a crazy feeling to be an author. So please, if you're looking for some literature, they're not long books. I'm not a super long-winded human being. I'm going to do them in a series, right? I want you to take it, digest it, just like this show. I want you guys to enjoy yourselves while reading these books, like I did writing these books for you. I'll be here next Friday, of course. There may be a pod in between here and there, but I'm enjoying my summer with my family. If there are a lot more questions about my agentic portfolio, please leave them in the comments. Maybe I'll do a how I programmed exclusive deep dive into it because it's getting a lot of questions. To be completely honest, I got a email from Robinhood today asking me if I wanted to do a survey on my experience with the agentic trading. And of course, I go through all their surveys and I do them all because it's important that they get the information from the people who are using it as honestly as possible. Like, I doubt they're over here watching my podcast because then they wouldn't need to ask me a survey. But it was a lot of questions. So if you get that, please answer that survey. It helps them build the portfolio of the future. Because if these agents work and they could help kind of ABC it for people, like, because I didn't have an ABC class, it just said Agentics open, connect something to it. And I'm like, well, what the heck connects to this? And once you connect it, then you're like, then what? So it was a lot of sandboxing on my end. Now, I did my research ahead of time before I got access to the actual portfolio to learn how agents think, how to minimize my token use. Because there's numerous news about how people are just egregiously overusing their tokens at companies. So please be conservative about your thoughts. Be concise. You don't want to overcomplicate your trade. You can make it really easy every day. Look for the best moving and buy it, right? You can make it simple or more complicated if you want to. But if you have any questions specifically, yeah, drop them in the chat and I'm happy to get them taken care of for you in a much longer, more dedicated podcast. But as the next week comes, I'm going to have my agentic portfolio continue trading, and it better not be down more than another 0.5%, because then I'm going to have to reassociate, because I have it at a 2% maximum kill switch, right? If the overall portfolio loses a certain amount, that's it. We stop and we figure it out. Because I can lose money, right? But you're a supercomputer, basically. Not basically. If you know what a supercomputer is, it's not this. But this is super programming, as Grandpa Dave likes to put it. And super programming has its nuances. So I'm learning that, and you're learning it too. So please drop those in the comments, and I'll get to them. But as always, farewell, stay safe, ahui ho, and I'll see you on the porch. I love you. Check that mental health too, like Drew Carey says.